European stocks cooled higher, but investors would have been wise to sell in May as markets look set to close the month well into the red. Germany cuts Greece some slack as reports suggest that Berlin will curb its calls for rescheduling Greek bonds in an effort to reach a deal on new aid for Athens. Milan turns on Silvio Berlusconi as the Italian Prime Minister loses local elections in the country's financial capital. Welcome back to Squawk Box. There's an hour and a half until the markets open here in Europe, of course. We are still joined by Mark O'Sullivan from Currencies Direct. But for the moment, let's get over to Becky and have a look at some of those overnight indicators as to where we're heading. And of course, we're without the US, Becky. Barclays President Bob Diamond joins us now. Bob, thank you very much for coming to talk to us. We really appreciate having you on the programme. And I wanted to start by getting your take on the global economy. There seems to be a debate raging. Are we at an inflection point? Do we go up or down from here? What's your take? Justin King, the CEO of Sainsbury's, joins us now. Justin, thank you very much for coming to talk to us today. When we looked at the numbers from Morrison's, one of your competitors, of course, they were giving us some pretty gloomy indications about pricing and talking about food deflation in the UK. What do you see on the pricing front? The first attempts by Barclays to try and take assets there, and they were stamped on by the regulator and told that this was too big a risk for a UK bank to take at the time. Any regulatory risks surrounding any move by a UK bank further into the Spanish market, do you think? Ian, thank you very much for coming to talk to us. You've said today that you remain cautious about the consumer environment. How cautious are you? What kind of visibility do you have? Paul Moody is the CEO of Britvic and joins us now in a first on CNBC interview. Paul, thanks very much for coming to talk to us. Let's talk a little bit about the Irish business, because you've mentioned in the past that you are restructuring your Irish business and taking a charge on that. Tell us how that business is performing for you right now, I guess, to inform our view of your business and also on a broader sort of macro level. Paul, let's talk about the Southern European businesses then, because that does seem to have been a little bit of a disappointment perhaps to the market and, as you suggested, maybe to yourself as well. Is it Spain? Is it Greece? What are you doing to try and turn around that negativity?
You're absolutely right. We were disappointed by that performance.
And I see that the Barclays Capital numbers, Bob, have been described by one of the analysts out there today as strong relative to peers. But can you give us a little sneak preview of what's happening in the third quarter? Because we're now 1 month into it, and it seems to have been plagued by some pretty low volumes. How is the most recent period performing for Barclays?
Well, we've barely got our first half numbers out of the way, and now you want to forecast on the second half.
You don't expect me to look backwards, do you?
We have clearly seen a pickup in volume.
Was expected. Anna.
Imperial Tobacco giving us numbers, Steve, so let's get an update there. Imperial Tobacco says basic earnings per share have come in at 91.3 pence. That's up 34, they say. Interim dividend per share, 28.1 pence. That's up 16%. Group sales have been driven, they say, by a strong performance in emerging markets outside the EU. We already knew a lot of the volume figures surrounding Imperial Tobacco. So what markets were particularly, or investors were particularly interested in here, was the bottom line and the profits, of course, but also any buybacks. And we are getting news of that today. A £500 million per annum share buyback programme is effective from today, the company said. The company says they're focused on maintaining our sales growth momentum and delivering a strong performance in the second half. May seasonally adjusted jobless total down 8,000 to 2,974 million. This is according to the Labour Office in Germany. That doesn't sound as much as expected because the market was looking for a drop of 30,000. So the adjusted jobless rate is now 70% versus 7.1% in April. So they're both moving in the right direction, less jobless than they were previously, perhaps slightly bad news in that maybe not as good as had been expected. Anthony Thompson is the chairman of Metro Bank, which is a relative newcomer to the UK retail banking scene, and he's with us. He was supposed to give us reaction. Anthony, thank you for coming in.
Morning, Anna.
We were going to get reaction, weren't we, to the report, but we can't do that, so we'll get a preview of what you think is going to come through in this report.
What type of recovery story are we seeing in Prague?
Thanks very much, Louisa. Yes, we are in Prague. We'll be travelling all week going to Latvia. We're bringing coverage from Poland tomorrow. We'll also be in Romania. So a full week of coverage. And the type of recovery we're seeing here really is one that sort of walks a middle ground, if you like, in terms of the Central and Eastern European story. Perhaps not as tough in tough times as Poland has been, not as resilient to the downturn as Poland was, but certainly not succumbing to some of the issues that we saw in those countries in the Baltic, where a great consumer boom led to a great fall afterwards.
Mr. Speaker, to think he was the future once.
The British political punch-up has typically featured two parties, and for much of the past century, that has been a choice between Labour in the left corner and Conservative on the right.
The UK has only elected one hung parliament since the Second World War, and that was more than 30 years ago. The voting system and concentrated party support typically result in an outright winner. And therein lies the problem for Olympic hopefuls across Europe. With governments and companies looking to cut back on spending, it could be guys like these who see their funding tested. So we've been training a little bit together. What do you think are my chances for 2012?
You might struggle, but I think you need a little bit of motivation.
OK, more motivation. I think I have an idea. Hello and welcome to a special edition of Squawk Outside the Box to mark the end of the first half of 2010. During the show, we'll look at some of the biggest events that shook the markets and the economy. After 6 months of equity trade, markets failed to show any gains as investors were hit by debt and double-dip fears. Austerity and deficits became part of daily vocabulary as Europe's debt problems dominated the headlines across the globe. Greece came close to bankruptcy, while other economies tightened their belts to avoid Athens' fate. The start of 2010 saw some powerful leaders out of a job. The prime ministers of Japan, Australia and Britain left their positions, and a coalition government came to power in the UK. And the largest environmental disaster in US history saw BP's future in jeopardy. CEO Tony Hayward faced the wrath of the Obama administration as attempts to stop the thousands of barrels of oil leaking into the Gulf failed. So let's review where we've been over the first half of this year. For equity markets, it's certainly been a torrid time. It's been a time of two halves to some extent. We spent much of the first part of the first half of the year, the first quarter, in fairly decent spirits, taking our cue from 2009, which hadn't been all that bad, and really picking up on that trend. And then we started to worry about austerity, or rather worrying about debt burdens, and then the resulting austerity in peripheral Europe in particular, and that led us downwards. So on the FTSE 100, over a 6-month period, down by 10%. The Xetra DAX faring a lot better, fairly flat actually, just dipping a touch. The CAC 40 suffering the worst of these three majors, down by over 14%. A lot of focus, of course, on their exposure to the banking sector around the periphery of Europe. What did the US do in this environment? Well, the falls there were not as extreme as we saw on some of the European markets. The Nasdaq Composite down by 7%. We had the S&P 500 down by 7.6%. And the last of the bunch, the Dow Jones, down by 6.3%. So big losses, but not quite as big as some of the losses that we saw in the European equity markets. Looking in more detail at what happened in Europe then, there's some expected and some unexpected trends when you look at which sectors were thrown up as the best performers and the worst performers. Along the top line here, household goods, food and drink, industrials, perhaps surprisingly, if we're worried about a slowdown, that sector should be doing quite so well. And perhaps surprisingly that travel and leisure did so well in a period where you worried about discretionary spending and, of course, that ash cloud, which we'll talk a little bit about later on. Technology actually managing to continue the strong trend that it saw in 2009, up by more than 4%. To the downside, energy stocks weaker. Guess what, though? A lot of that has to do with BP and the spillover effects into other shares, because we did see that, of course, as well. And that sector down by more than 18% in the first half. Utilities, perhaps a bit of a surprise that we've got some of the utilities trading so weakly, if we're all looking for some shelter, some cover in these torrid times. Banks down by 13.7%. We'll talk more about the bank sector in focus in the first half. Construction, of course, a very cyclical sector under pressure. And basic resources also under pressure, as we feared whether we're going to head towards some kind of double dip, and of course we don't know the answer to that yet. Looking at some of the commodities where we saw the tensions coming through here, crude oil, the price there down by more than 6%, of course really playing along with the basic resources story, concerns about where the economy as a whole is going. Spot gold, an entirely different story. As so often is the case, we saw this very much acting as a shelter for nervous investors. Spot gold up by more than 13% in the first half of the year.